I think with contrarian investing, more probably than any other type of investing, the role of the advisor is so crucial because it is in our psychology to want to sell something that's lost money. It is in our psychology to want to get in the thing that's done well, particularly when your friends are telling you, hey, I invested in Bitcoin. I made this much money. I have FOMO. I don't want to miss out. And those are exactly the wrong times to buy and sell. And so I think the advisor has such an important role of playing that professional that can really give that advice to the client and help them understand that the way that you win over the long term is by being willing to hold steady in those down times. I think one of the really helpful ways that advisors can get clients comfortable with that is show them the history. Show them what funds really beat the market over time, and then breaking it down and showing them what those tough years felt like. Because people who pulled out at those tough years, that was going to be a painful thing after that, reversion happened. And the people who stuck in and stuck with it did phenomenally well. So I think it's just that kind of education, show people the history, help them see that these short-term moves, are what make or break someone's future financial security. I think the other thing to do is helping people understand that staying invested through the downs is actually quite courageous. You have to have courage and sort of nerves of steel to win in this business. And that doesn't just go for people like me. That goes for the client as well. And I also think it's helpful for the clients to realize and to recognize that we're invested in these funds too. It keeps us up at night too because the people that we love are invested. And so, being able to just stick through the tough times and recognize that your willingness and your ability to do that will help not only you, but your children's future is just so important. There's always a nagging question in the back of your mind. If you look at the things that look cheap on the fundamentals, there's this question, well, has something changed? And there's going to be a lot of discussion in the market about how something has fundamentally changed. An example of that is Honda, the car company. And you hear a lot about Tesla, electric cars, EV is going to take over the world. And you've got to be able to step back and look not just at the numbers, but at that thesis. Okay, how likely is it that EVs are going to completely take over the world in the time frame of my investment? How many cars are EVs now? 0.6%. Okay, where are they getting their electricity from in Australia? Coal. I actually had a Tesla Uber driver last night. And the guy was driving me and I said, oh, this is interesting. Why do you have this car? And he was saying, I care about the environment. I said, that's great. So where's the electricity come from? He said, oh, the battery. I said, yeah, but when you plug it in, where does electricity come from? Oh, from, the Tesla pays for it. I said, okay, but what's creating the electricity? And he said, coal. And I just kind of looked at him and was like, so we switched from gas to coal, So when we're looking at an investment in a car company, we've got to take the hype out and take the story that while everything has changed, everyone's going to be driving EV and every headline is telling you how cars are basically never going to get driven again. And then you look out on the roads and you realize that that's just not the case. For the typical Australian investor like Kate and Tony, I think the biggest thing to be thinking about is making sure that you are de-risking by diversifying. So you want to make sure that you're not 100% in Australian property or maximally in Australian property and you've got more options out there. So 2 products that Orbis has that could be really helpful for this type of client. The first is our flagship global equity fund. So with that fund, you're going to get access to all of our contrarian thinking about companies in the equity space. And it's 100% equity invested. So that would form a part of the portfolio of someone maybe in the close to retirement age that Kate and Tony are. The other thing that we offer is our multi-asset balanced fund, which is a more moderate risk product. You still get access to all that contrarian thinking, but it's there in equities and in bonds, and it's got a little bit of a lower risk profile, so maybe more of a kind of fix it and forget it.